Hey, everyone, it's me, Tommy. I'm so glad you could join me. I've been digging into Sharir of information this week, and I've found some really interesting things that I think you should know about. Now, before we get into it, I want to be crystal clear about something. I'm not some kind of financial guru or a wildly successful crypto millionaire. I'm just your friend, and I've spent some time sifting through all the noise to bring you what I believe is genuinely useful information. It's the kind of stuff I'd share with my own family. And please remember, this is not financial advice. My goal is simply to help you stay informed in this ever-changing crypto world. So, grab a coffee, get comfortable, and let's break down what's been happening in the world of crypto from June 15th to June 22nd, 2025. Part 1. What has happened? The big crypto shakeup. Alright, so let's dive right into it. This week was a roller coaster to say the least. The biggest story, and the one that really sent shockwaves through the market, was the significant downturn we saw towards the end of the week. We're talking about a major market dip. Bitcoin, which was flirting with some impressive highs earlier in the month, took a tumble. We saw it drop below the $100,000 mark, which was a psychological blow for many. At the time of this recording, it's hovering around the low $100,000, trying to find its footing. Ethereum also felt the heat, seeing a significant price drop. And as we know, when the big two catch a cold, the rest of the altcoin market often gets the flu. Many other cryptocurrencies followed suit with notable price decreases. So what caused this sudden drop? Well, it seems to be a combination of factors, but one major event stands out. Part 2. What war could impact the market? The geopolitical factor. This brings us to a crucial topic that we can't ignore: the impact of global events on the crypto market. This week we saw a stark reminder that even the decentralized world of cryptocurrency is not immune to real-world geopolitics. News broke of escalating tensions between the United States and Iran. This created a wave of uncertainty and fear across all financial markets, not just crypto. Investors, in times of high risk, tend to move their money away from what they perceive as more volatile assets. And unfortunately, crypto often falls into that category for many. This risk-off sentiment was a major driver behind the market downturn. It's a classic flight to safety, where investors seek refuge in more traditional assets. This is a perfect example of how a conflict, or even the threat of one, on the other side of the world can directly impact the value of your digital assets. It serves as a powerful lesson for all of us in the crypto space. We need to pay attention to what's happening globally, as these events can and will affect the market. Part 3. What should you do? Navigating the chalky waters. Okay, so we've had a bit of a market shakeup, and there's some geopolitical tension in the air. The big question is, what should you do? Again, and I can't stress this enough, this is not financial advice. But here are a few things I'm personally thinking about and that you might find helpful to consider. 1. Don't panic sell. It's easy to get caught up in the fear and sell off your assets when you see prices dropping, but history has shown us that the crypto market is incredibly resilient. Panicking and selling at a loss is often a recipe for regret. Take a deep breath and look at the bigger picture. 2. Reevaluate your risk tolerance. Moments like these are a good gut check. How did you feel when you saw the market dip? Were you losing sleep? If so, it might be a sign that you're overinvested or that your portfolio isn't aligned with your comfort level for risk. It's always a good time to review your positions and make sure you're comfortable with the potential downsides. 3. Consider dollar cost averaging. For those who believe in the long-term potential of a project, a market dip can be seen as an opportunity. Dollar cost averaging, which is investing a fixed amount of money at regular intervals, can be a less emotional way to build your position over time. It helps to average out your purchase price and can reduce the stress of trying to time the market. 4. Stay informed, but don't get overwhelmed. It's important to know what's going on, but constantly staring at the charts and news feeds can be mentally draining. Set aside specific times to check in on your investments and the news, and then step away. Your mental health is just as important as your financial health. Part 4. Other important news from the week. Beyond the market downturn, there were a few other significant developments this week that are worth keeping on our radar. The U.S. Genius Act.
In a potentially massive move for the industry, the U.S. Senate is discussing a new bill called the Genius Act, which stands for Guiding and Establishing National Innovation for U.S. Stablecoins. This is a big deal because it's a serious attempt to create a clear regulatory framework for stablecoins. Love it or hate it, regulation is coming, and this could bring more legitimacy and stability to the space, which could attract more institutional investors. Speaking of institutional investors, the trend of companies and large financial players getting into crypto is not slowing down. We're seeing more and more corporations adding Bitcoin to their balance sheets. This long-term confidence from big players is a positive sign for the future of the industry. DeFi and NFT updates? The world of decentralized finance and non-fungible tokens (NFTs) also had its share of news. While the broader market dip affected these sectors as well, innovation continues. We're seeing new projects launch and existing platforms evolve. The NFT market in particular is showing signs of maturing, with a greater focus on utility and real-world use cases beyond just digital art. A word on security. And finally, a quick but important reminder about security. This week saw reports of new scams and hacking attempts. Always be vigilant, double-check website URLs, be wary of unsolicited offers, and never share your private keys or seed phrases with anyone. It's better to be overly cautious than to lose your hard-earned crypto. Conclusion. Looking ahead. So, to wrap it all up, it's been a challenging week for the crypto market. The dip, fueled by geopolitical tensions, was a stark reminder of the risks involved. But it's not all doom and gloom. The continued push for regulatory clarity with bills like the Genius Act and the unwavering interest from institutional players paint a much more optimistic long-term picture. My key takeaway for you, my friends and family, is this: stay calm, stay informed, and think long-term. Don't let the short-term volatility scare you away from a technology that has the potential to reshape our financial world. As always, I'll keep my ear to the ground and bring you the most important updates. Feel free to leave a comment below with any questions or topics you'd like me to cover next time. Until then, take care, be safe, and I'll see you in